It really is wonderful to see this many people in the room. I'm told this is the most popular session of the conference. I'm prepared to believe that, certainly. If you can detect a twang in my accent, it's because I'm Australian. I came over to London from Sydney in October 1990 for 18 months. I enjoyed London. I love London. I stuck around for another year, and round about the time I was due to go home, I met a French girl. So that's what happened to me. I'm here. At that point, in 1990, the world was very different, and certainly the influences on insurance were very different than they are today, with some similarities. So, what was happening in 1990 in October? Thatcher was still in government. Many of the people in this room weren't born. So we had a conservative government with Margaret Thatcher. Germany was not yet unified. The Channel Tunnel hadn't broken through. The oil price had just doubled that year from $17 to $34 as a result of the Iraq invasion of Kuwait. So the world was about to go into the first Gulf War. But what was happening in the financial markets, also I think very interesting and relevant to insurance. If you looked at regulation was certainly there. It was a very light touch, I would say, for intermediaries. It was certainly still present for the carriers, but it was more a question of solvency and capital. Certainly conduct was not on the horizon. It was I would say, a lighter touch by far than we have today. If you look at anyone want to guess what the Bank of England base rate was in October 1990? Anyone brave? 10. Not bad. It was 14.5%. Mortgages were really, the interest rates were extremely high, but insurers and intermediaries made money falling over themselves. They really did, right? So many business models were designed to make an operating loss or an underwriting loss because the investment income brought everything home. Clearly, we're in a different environment today. Technology was also very different. When I arrived in October 1990, I did have a business card. I didn't have a direct dial. I certainly didn't have a mobile phone. And I certainly didn't get 250 emails a day, whereas I do today. So not everything's an improvement. But it is so different today. And yet many people over the last day who've been talking about insurance have said that actually the processes, approach to insurance has changed very little in the 300 plus years since Lloyd's was founded. So that, I think, sets the scene for today's InsurTech panel and begs some of the questions around collaboration versus disruption, a burning platform, what it is that InsurTech is trying to solve for. And I'm very privileged to have a fantastic panel. And I'll ask them to come onto the stage right now, in fact. We've been given a running order, so in order, please. Thank you. With the accompanying music. I'll please have a seat. I will ask the panelists to introduce themselves briefly for hopefully not much more than a minute to give us a flavour for what part of the InsurTech environment or ecosystem that they operate in. But I can tell you that we have a great representation. We have a founder, we have an accelerator, we have an investor, and we also have an industry alliance that is solely devoted to the commercialization of blockchain in insurance. And I think that's very important. We've heard a lot about blockchain, and perhaps 2018 is the year to go. So in running order, can I ask you to go first, Christopher?
Sure, happy to do it. So thank you all for having me today. My name is Christopher McDaniel. I'm the president of the Risk Block Alliance. And as David was just mentioning, we are the first end-to-end insurance blockchain industry alliance. It's really exciting what we're doing because we're not just looking to create interest in the industry. We're taking it to the next step. and we are actually building solutions for the industry, real production solutions that bring real value to our members. So very different model. We're very excited about it, and I'm happy to be here.
Thank you.
Hi.
Phoebe.
Hey. So I'm Phoebe. I'm the co-founder and CEO of Brolly. So we're building a smart insurance aggregator, and the problems that we're really trying to tackle are the massive overspend that we all have in our personal insurance. So overspending on the insurance that you're buying, and insurers sort of hiking prices every year, and making sure that customers are actually buying the right products at the right price. So we've been around for around 2 years now. Prior to that, I was at Aviva as an underwriter and product manager.
Sabine.
Sabine VanderLinden. I'm CEO of Startupbootcamp InsurTech. So I run now a couple of accelerators around the globe, one in London and the other one in Hartford, Connecticut. I started actually my career 20 years ago in insurance at Deloitte of London, so I do understand insurance. And 3 years ago, I decided to make the shift. I first went into fintech and worked for a fintech startup to really understand what that was about and a group of investors. And 2 years ago, I joined Neckties and Startupbootcamp to lead InsurTech and find James out there that would work hopefully with our corporate partners who are the investor in our programs.
Thank you. Sam?
Great. Hi, everybody. My name's Sam Evans. I'm general partner at EOS Venture Partners. We were the first independent specialist insurtech investor. We launched in 2016. We've made 8 insurtech investments over the last 2 years. And we work very closely with Sabine at Startup Bootcamp. My background in previous life, I did a lot of work with the large carriers. And the catalyst was to get in at the start of what I believed at the time would be this wave of transformation and change that was going to hit the insurance sector, which is now starting to play out. So, yeah, we wanted to create a vehicle that could get in at the ground level, invest, and really make a difference as InsurTech started to grow and mature.
Terrific. Thank you. Right, we'll get straight into it. So I think we'll start with you, Sabine. I want to explore the theme of collaboration versus disruption. So from my point of view, most, not all, but most of what we're seeing today is incumbents working alongside InsurTech to improve distribution, to improve the customer experience, to help with risk selection, that kind of thing. We're not really seeing disruption as such. Would you agree with that? And what are your thoughts on that?
Yeah, I would agree, but there is always nuances to any of those questions. It's true. When you look at InsurTech and what is happening right now between incumbent players, established insurers, and the startup community, it's about solving immediate problems. So what we see is a lot of the startups which are collaborating with insurers actually are trying to solve an immediate problem, whether it's a chatbot being implemented in service environment or risks or AI being implemented in underwriting. It's all about near-term implementation, near-term solution solving. And that would be probably, for me, between 60 to 80% of the activities we see out there. However, you do have a few disruptors out there, as we know. And those disruptors usually become themselves insurers or find the capacity to challenge the market in the way the market is operating right now. We would have names such as Zhonghan in China, a fully digital insurer, or Zenefit or Oscar. I know they defeated their problems, but they're still remaining unicorns, so large organizations which actually have achieved a valuation of over 1 billion in insurance. But I think when you start looking at the future, insurers are now seeing that they understand a little bit more the ecosystem and what is going on, and they are looking at capabilities now to solve major business innovation problems. So changing the way they do things.
And Sam, from the investor's point of view?
Yes, I think I would also agree, but we look at it slightly differently. And I think what we'll see actually, and it's starting to happen, there'll be significant winners and losers within the existing ecosystem. So the disruption will occur, but it may not be across the entire value chain. It'll be parts of it. Incumbents, insurers that are able to get ahead, embrace innovation, and work to drive new business models will create significant advantage versus their peers. And I mean, it's a huge number, but we believe we will see $1 trillion shift in the industry over the next 3 to 5 years as a result of innovation. From a startup perspective, I think it's very difficult to challenge such an established, heavily regulated industry. So working in partnership with incumbents makes a huge amount of sense. But for us, we see the disruption coming as the existing value chains fracture, and the companies that are able to leap ahead will really drive the industry forward.
Thank you. And if I turn the question to Phoebe and Christopher, and I suppose if you asked it differently, what are the problems or the key problems that you think InsurTech is trying to solve for? I'll start with you, Phoebe.
Sure. Well, we're in a massive industry. It's a multi-trillion-pound market, and there's a ton of problems to solve. I mean, for us, there's problems in pricing. There's problems in the cover that people are buying. There's the fact that people are sort of turning into, behaving in ways that you wouldn't normally behave, i.e., trying to game the system. We've learned a lot of that from our customers, trying to quote in a particular way because they figure that their hack towards quoting is by putting in particular answers, or when they're coming to claim, trying to figure out what are the scenarios in which my claim is going to be paid out, because the insurer is probably going to try and get out of it, and actually switching around the market, having to haggle and having to negotiate with your existing provider if you want to get something better. One of the big things that we're seeing at Brolly is, customers are overspending every year by over £10 billion in the UK alone because they're not switching. And that's a really significant number. I mean, that's a huge amount of people's money that could be in their pocket, and it's not. And we see some real structural issues with the way that the market is set up right now, that is sort of designed for people to fail. And until we actually get to the root of those problems, we're not going to see any real shift. So we see some of the big customer problems are making sure that people understand what they're buying. They understand that they can claim under a certain number of circumstances, and that unless they're actively involving themselves in the process of moving around the market, that they're probably not going to be getting the best deal. We're trying to tackle those problems, i.e. helping people to automate a lot of the inertia that they're experiencing today. But the problems are vast, and the problems are not solving themselves. So there's plenty to do.
Okay. Christopher?
And I would say one of the big things that it's a problem that not necessarily everybody even realizes is out there yet, is if you look around at what's being done in this space, there's a lot of different things that are happening. Everybody's doing their own thing. I kind of relate it as a metaphor back to the early days of the internet, before there was really any commercialization going on the internet. It was just basically the wild, wild west going on, and that's the kind of the way it is right now with InsurTech. It's the reason that we are a big believer that for the insurance industry, it's important to have a common standard framework that different solutions can plug into. It is key because it then gets us all pulling in the same direction, us all thinking the same way. And it gives us the ability not only to be able to implement different InsurTech solutions in a standard manner, but more importantly, that framework itself, if everyone is focused and plugged into that same framework, that framework grows in value. And there's opportunities to connect point A and point B together that were completely separate solutions before, if you're using a common framework that can really pull it together. And that's one of the things that we're building at the Risk Block Alliance, is that common framework, that common fabric, if you will, that everyone can plug into.
Terrific. I mean, Somebody described to me the other day that they saw blockchain as a sort of Tamil tiger. I think they actually meant Bengal tiger, but something that is waiting to pounce, and that 2018 is the year that blockchain will become relevant.
We believe so. We believe so. It's interesting from the standpoint of, if you, like I say, if you look even 12 months back, everybody's creating proof of concepts. Everybody's creating one-offs that don't connect to the back-end platforms from a blockchain standpoint. We call all those things collectively science experiments. But we truly believe that the era of science experiments is behind us. Now it's time to start doing things in a standardized manner, everybody pulling in the same direction in the insurance direction through a common framework, as I was speaking about earlier. And the nice thing about that is there's room for everybody at the table. So we build solutions. We have a software factory, but we build solutions that plug into that blockchain factory. But we've also created tools so that different insurance entities can create their own tools to plug in. Solution providers, both existing and ones that want to create new solutions, can plug in. And again, all of that makes the framework stronger and stronger and brings more opportunities to bear, being able to collaborate and work together. So instead of having a scattered set of solutions out there from an InsurTech standpoint, we have one fabric that brings it all together.
Okay, and I'd like to ask you to try and bring blockchain alive to this audience with some real examples. And I know you have some because we've talked about a few of them, because a lot of people struggle with blockchain, in my experience. In boardrooms, everyone talks about it now in a way they probably didn't 1 or 2 years ago, but what does it mean? How can you use it? And I'm going to come back to you on that one.
Sure.
But if I could just go back to you, Sabine, and Startupbootcamp sees thousands, literally thousands, of potential startups, and then reduces that number down to 10, and they go through your accelerator program every year. What are the key ingredients? What are you looking? What makes a startup successful and actually survives your filtering process? Because I think when we spoke earlier, I think there was something like 4,200 entities at the beginning, and this is globally, so across all regions. At the beginning, and you get to 10. So can you give
Sure.
the would-be bootcamp attendees a clue?
So we have a team of what we call scouters, so individual, real people, actually, who goes to different continents, different cities, different countries, to identify potential candidates for the program. So we did scout over 4,000 startups this year. The year before was 2,500. In the first year, 1,300, just to show the scale of change, right? A lot of startups, which are tech startups, are realizing actually insurance is a great place to be. It's ripe for innovation, and actually they are going to jump on the bandwagon and try to help insurers as much as create their own solutions. And so first, we look at the overall ecosystem, what is coming through, and it's important for us because it gives us a view on themes and patterns and what is coming out there. But we are going to also start with what we call innovation thesis. We are going to spend some time with our corporate champions and try to really understand what is keeping them awake at night. And sometimes we're also going to add to the flavor and recommend some things they should be investigating, but understanding what is affecting those we want our startups to have project with, so drive traction, is very important. Now, when you look at the startup side, before going down to 10, we start with 1,000 where we interview the startups, and then we go down to 150, which we actually share with our corporate partners, to come down to 30. And then we invite 20 to actually be evaluated, which goes to the 10. But for us, when we look at a startup, partly because we tend to work with a lot of early stage businesses with Sam, we have to look at beyond the idea. We have to look at the team's capabilities, the team ability to innovate, to listen, actually being a good listener and understanding the problems of the corporate they want to work with is very important, and execution. Actually, execution is core to the equation. Then we for sure look at the matching ideas based on the themes which are there and are requested by our corporate sponsors, but then also the timing of the idea. We have been looking at blockchain for the past 3 years, right? And we know that the industry was not ready for it, and maybe the bootcamp is not the right place actually to have startups, because one of our key metrics is traction. So if it's just to experiment, it might be best to do that somewhere else. And then the other key thing is money. How the money is being spent, how it's being used, what has been invested already. As one of our key metrics is also helping the startup find their investors. So in short, people, money, ideas, timing, those are the key ingredients we'll be looking at.
Thank you.
Startups.
Sam, you provide the money. Are there any other secret ingredients that you're looking for?
I'm not sure it's secret, but we would apply a number of the same lenses that Sabine does. For us, it starts with the team, and not necessarily just the idea, but the ability to execute on that idea. We look at scalability. So is it a very niche solution, or can it scale across multiple products or markets? We look at speed. So again, which links into the blockchain example. For us, it's no good investing in something that's only going to come to fruition in 10 years' time. We need to see some traction in the early phase. We'd also look at uniqueness and defendability of the proposition. So the competitive landscape, what other solutions exist out there, and if company is successful, how would it defend its position in that marketplace? So there's a number of different things. There's no science to any of this. Valuation expectations is another issue that's important, and having alignment between the investor and the startup. There can be certainly issues with that, certainly at the moment. But fundamentally, if I had to pick one thing, it would be execution.
Okay. And is your time frame as an investor different? So typically I would think of a VC fund looking at a 3 to 5 year exit. Is that the same for an InsurTech?
So I think we have for InsurTech we view it as slightly longer. Right. So actually our fund is a 7-year fund. I think just recognizing the relative maturity of InsurTech, we need more time to get to those successful exit points.
Okay. And Phoebe, as somebody on the other side of that, and having been through some of these startup bootcamp experiences, what do you? First of all, what's your experience like? What's your experience of that process, seeing it from the other side?
We came through a program called Entrepreneur First, which is basically like the European version of Y Combinator. I suppose, hindsight's a pretty wonderful thing. I think when you look back, even a week ago, I'd hope that you'd learn something that you wish you'd known then. Then, your rate of learning is going pretty well. We started 2 years ago. A year ago, there were 2 of us. We had just raised £1 million. I think we thought things would happen a lot faster than they did. But actually, what I've realized now is that, building this type of company, it takes a long time. We're doing huge integrations with major insurance companies. One of our key partners is AXA. We're integrating with them on motor insurance. We have more partnerships like that we're doing. And these are not things that happen overnight. These are companies that have huge legacy issues. It's very difficult to work with them. And I think, from the investor's viewpoint, thinking about a 3 to 5 year exit is a very short space of time. And I think it's also always a complicated thing for a founder to think about. I get asked about what's your exit strategy, and I see a future where insurance is a very different place to where it is today. And I'm not thinking about my exit strategy, because we're really trying to change, some real fundamental problems, make a big shift in the market. So we're thinking long term. So investors that we're working with, it's more what's the long-term game, and how do we make this a massively successful company that has a huge return rather than something that's a bit more minuscule. So I think we think about massive grand scale rather than any short-term gains.
And looking at the time frame, part of it is about scale. So one of the things the incumbents have that the startups don't have, by definition, is scale.
Yeah.
I mean, how do you deal with that issue? So what's the approach for somebody to be a real challenger? I do want to come back in a minute to the disruption versus collaboration theme, but what's the approach that Brolly takes to try and meet scale and the challenge?
So incumbents have scale, but they also have massive legacy issues, and scale is not something you achieve by solving scale. You can't just throw money at PPC and tube ads and hope that you're going to achieve scale. Scale is the rate of growth, and the rate of scale is the rate of solving customer problems. And if you're constantly removing all the blockers that customers are facing, then you're on the path to building something that's truly valuable. I mean, startups, in terms of fundraising cycles, you're going from a place of, you've got an idea, and then you need to build a product and try and achieve some kind of product market fit. So you're trying to find the problem, and does my solution fix that problem? And the fact is that because we've got such rich issues in insurance, once you find that, and you find that value that you can give to a consumer, you're going to grow. We have grown pretty fast with our customers, and we've done zero marketing, and we grow purely through word of mouth. That will accelerate when our product gets better. I mean, we have a launch coming in a couple of weeks where we're trying to help customers to switch insurance provider and help them get better value without them having to do that much work. The first thing we put out there is not going to be a perfect solution. So when we find that a customer is not using our product, we're asking questions. Okay, why? Was it price? Was it quality of provider? Do you not trust us? What is the thing that we need to solve next? And if you can go through that learning cycle, then there's no reason why you can't be successful. You have to win if you have that mindset.
Yeah. And the feedback loops are very, very important and easier to achieve with digital. I think, for sure. And now, Christopher, I haven't forgotten you. I did set you a challenge, and I wanted to make sure you had a chance to think about it, of bringing blockchain alive in insurance to this audience. Perhaps I'm the only person who hasn't sussed it, but with some real examples. Well,
sure.
2 or 3 things that are commercially viable.
Absolutely.
That people could discuss in their boardrooms or think more carefully about.
Absolutely. I'm more than happy to give a couple of examples. And as Phoebe said, there is no lack of opportunity. There are literally hundreds of different use cases that are on our master list. It's more, how many can we handle at one time? But to give you a couple of examples, one of the first use cases that we rolled to production was proof of insurance. Fairly simple application, and basically what it entails is a plug-in into the mobile app of the insurance carrier, so that when 2 parties get into an auto accident, they literally can tap their phones together and instantly know whether the other party has insurance and what their coverage is to ensure that they do have insurance coverage. Uninsured motorist is a major problem. So from that one simple application, which was again one of the first ones that we rolled out, we have found out that there's a whole category of solutions even under that same heading of proof of insurance. So let me give you an interesting example. So we rolled out our solution in December for proof of insurance from a personal auto standpoint. A couple of weeks after we finished rolling that out, I got a telephone call from a trucking company, and pretty large trucking company in the U.S., but not the largest trucking company, but a fairly large one. And they shared with us that they have a situation where every time a truck driver comes, maybe I should call it a lorry for over here, but if every time a truck driver goes to a depot to pick up a load that they're going to take somewhere, there's a 25 to 30 minute manual proof of insurance process that happens where there's telephone calls, emails, whatever, to basically prove that they have the proper insurance to take whatever that load may be. And they wanted to repurpose our proof of insurance to be able to take that 25 to 30 minute process down to, basically an instant process. And that's something that we're working with them on now. Again, this is one trucking company. That one trucking company does that process 200,000 times a day. Pretty significant. And again, that's just one. And there's hundreds of trucking, if not thousands of trucking companies out there. So that gives you an idea of the kind of impact that you can have very, very quickly. And I do think it's important, too, to understand that part of making that happen is we can't just think about insurance carriers and insurance distributors. We really have to think about those third parties like those trucking companies and others out there that come into play, too, because they're a vital part of this. So that's an interesting one. Another one that we are building currently is something called subrogation. Subrogation is basically the process that happens between two insurance carriers behind the scenes to basically negotiate and settle a claim. There's weeks and weeks of process that goes back and forth in a manual way, telephone calls, emails, etc., back and forth, sometimes things over snail mail as well. And the bottom line is that for every claim, one side or another winds up writing a paper check. So between insurance carrier A and insurance carrier B, they may be writing thousands of checks per month, paper checks that go out. So from a blockchain standpoint, what we're doing is automating that negotiation process on the front end to get to a immutable contract that everybody agrees on. But even more important is the money settlement, because now carrier A can write one check. Instead of thousands of checks, they write one check to carrier B, and vice versa. And by the way, they're no longer having to write electronic or paper checks, because we're also making that writing of the check an electronic transaction as well as part of the process. Every insurance firm out there has, even the smallest insurance firm has 50 people doing this process. Some of the larger insurance firms have hundreds of people that are working through this negotiation process. It doesn't eliminate the negotiation, but it streamlines it, and it makes the payment process much simpler and takes it down to something that is a fraction of the cost that it normally is. So that's just a couple of solutions there. Again, there are literally hundreds of solutions out there. And they're in all of the spaces. They're property and casualty. They're life and annuity, healthcare. There's just more potential solutions out there than you can even get your arms around.
You mentioned insurance across the sector, so you talked about life and P&C health. Sabine.
Yeah.
I mean, I was thinking about your cohorts, and you're in cohort 3, I think.
Yeah.
Is that right? Yeah.
Yeah.
So the way I've seen it, I suppose most of the InsurTechs initially seem to be personal lines, P&C to begin with. Mm-hmm. But one, I see an opportunity, and I think there is a big opportunity, I think, in commercial, but in life. I mean, have you seen that come through? I mean, what's the difference between cohort 1 and cohort 3, if you like?
So, like the GAFAs, right? It starts with personal lines. It's easy. It's an individual. We can feel and we can actually experience things. So, cohort 1 was definitely more personal lines focused. What we've seen with cohort 2 is that we started then touching more in the business model side. And actually, we did have one in cohort 1, which actually shifted and pivoted, and now is doing asset digitization in a very unique way. The startup is called BuzzMove, BuzzFold. But in cohort 2, we started seeing more commercial lines startups, looking at risks in different manner, combining data, big data, external source, and AI to actually solve commercial lines problem. This last cohort, we're moving to industrial insurance, so looking at much bigger problems, looking at collaboration with the ecosystem. So airline industry collaborating with insurance as an example. And we also are seeing more what I call adjacent capabilities. So we are looking at startups solving service problems rather than just products, capabilities to actually drive that customer experience and drive this uniqueness between the way insurers are engaging with their customers.
So I'm just looking at the questions and the themes from the audience. One of the most popular ones is the challenge here is a lot of what we've discussed so far is the current industry. So I'm going back to the collaboration versus disruption theme, I suppose. Sam, where do you see players like, where do you see the big data carriers like Amazon? Amazon's entered the health market alongside JP Morgan and Berkshire Hathaway. We don't know what that will look like, but will that cause disruption? And those guys have money. They've got lots of data, and they're two ingredients that could make a difference. Do you have a view on that?
Yeah, absolutely. And they also importantly have the customer relationship as well. So they've got everything that they need. So for us, these game-changing strategic partnerships are going to transform the industry. So the example you've given is a good one. You've also got Apple, Cisco, Allianz, Aon on the cyberspace. Even what SoftBank are doing with Swiss Re. So you've got some huge international conglomerates. We shouldn't forget the Chinese company, the Chinese tech giants as well. They're actually ahead of Facebook, Apple and Amazon in terms of insurance. So these companies are going to bring game-changing potential, and it throws an interesting question to the existing insurers around how they're going to deal with that. And I think ultimately it'll really shake up the industry, and we've seen that already in the US. So the US life and health insurers looking at how do they respond to what Amazon are doing.
Okay, so I've got time for one last question. So if we're thinking about, and I'm going to ask everyone on the panel just for a view, if you're looking into the future, and this is a question that Daniel Schreiber and Paul Geddes were asked last night, where do you see insurance in 20 years? What do you think will be fundamentally different? What will it look like, feel like? And I'm going to give you the hot seat, Christopher.
Sure. Well, I think number one, the insurance in 20 years is going to be a much more collaborative experience. Right now there's obviously fierce competition between many insurance entities that are out there. Competition is going to continue, but you're going to see much more collaboration, I believe. We have to come together. We have to share information for the good of all, and I think you're going to see more and more of that over time.
Okay. Phoebe.
Well, I think a lot about artificial intelligence and the future of that, and I think AI is one of the most important things that's happening this century in terms of the shifts that we're going to see in the world. And there's huge amounts of research going on, everywhere in how that's going to change the future. I think insurance specifically it's part of our life that we're not actively engaged with. We have to accept that there are certain things that should be automated and should be insurance being built on data and the transfer of risk. It's the perfect problem for something like AI to help solve in terms of making sure people have the right products that suit their lifestyle, which is founded on data, and they're always paying an accurately priced amount for transferring that risk. So I suppose we see the future of insurance just being something that's default part of your life.
Okay.
Talk about big data, Internet of Things, being able to leverage artificial intelligence to underwrite and actually predict what is going to happen. I would say for me, one of the business model which will probably be out there will be embedded. Insurance will be in everything we do, and we won't even feel it. And that means that potentially business model in insurance may not be insurance anymore.
Okay. Sam?
Yeah, so I think I agree with all of that. We'll see a lot more strategic partnerships, recognition that internal capabilities and data are not sufficient to address the ultimate needs of the consumer. We'll see a lot more automation, a move from pure protection type models to prevention, mitigation, and ultimately prediction, and really insurance working to impact individuals at their, what we talk about moments of truth. So when actually the individual really needs the insurance solution in whatever form that may take.
Terrific. Look, we could talk for a long time, and we could take a lot of questions for the audience, I'm sure, but we run out of time, and this thing's flashing at me now quite aggressively. So we're going to call it quits there. But I'd like you to thank the panel, because they've put in their contribution.